I talk a lot about real estate. People want to understand what it is the value to your portfolio, and how can it be used as a tool to get you to financial independence. We're going to dig into all that today. It starts with the book, Rich Dad, Poor Dad. In Rich Dad, Poor Dad, Robert Kiyosaki lays out this framework of the cash flow quadrant. And it's amazing because you understand very quickly when you look at this. On the left-hand side, you have the employee, top left, who is trading their time for money. You also then below that have the consultant trading time for money. Arguably, the consultant has more freedom, but both of them, they stop working, no income. Then on the top right, you have the business owner. The business owner owns the business. They get some income from it. They also have this asset increasing in value. And so even if they stop working, they still get income. They still have value being created, growth, etc. On the bottom right-hand side, you have the investor. They have money is invested in assets that give them money, that pays them checks. This is what I read when I was going through college, and the concept became clear to me. If I have enough money that I've saved up and I buy these assets that pay me, that's how I can replace my check. That's how I can reduce risk in my lifestyle and in my life. So if something happens with a job, I've got checks coming in. I got it. The step of how do you go from this book to investing in real estate is not clear. Now today, in addition to Tech Careers and Money Talk, I also have Wealthboard Capital, which is a private equity company that I own that has invested over time in $400 million of real estate. We currently own $230 million of assets today. So 1,700 doors of multifamily or apartment buildings, 5,000 ATMs, and 900 mobile homes. Those are the assets under management for the private equity company. When people hear this, they ask, okay, what is private equity? I've heard that term a lot. I don't understand what it is and why. Why would you go do that? You have a good tech career. You are gaining responsibility, climbing the ladder to the C-suite. Why would you go and start a private equity company? The story behind that is interesting because I was doing a lot of research in understanding how to invest in private equity myself with my wife, Regine, as a family. And then as I started having some success, I had other technology employees and executives who came to me and asked to put together investments for them so they could co-invest. And that's really the story behind the company. Is like many things that I do, I want to show people what great looks like with something tangible. And so today, I really want to break down what is private equity. Private equity has been very private for many years. This is why you haven't heard about it. You may not understand it. But I think it's important that we understand the complete landscape of investments, or the tops down level, which is what is a traditional investment and what is an alternative investment. And this is going to lead us to define what is private equity. So traditional investment, stocks, bonds, money market accounts, certificate of deposit, CDs, savings account, those are traditional investments. And all of those investments, the things that they have in common is they are all managed or monitored by the Securities and Exchange Commission, the SEC, or the FDIC, which is the Federal Deposit Insurance Corporation. All of those have some type of government oversight, government backing behind them, and they're traditional, considered low risk, a lot of liquidity, and there is a system and a way that they are evaluated, monitored, so it's clear on what they are. Alternative investments are everything that sit outside of that. And this delineation was carved out in the 1930s in the Securities Act. And there was a Regulation D that was written that said if an investment meets that qualification of Regulation D, it is what's called a private placement. It is private equity. It is an alternative investment, meaning it's outside the purview of this government oversight. So this is why you don't really hear a lot about private equity or alternative investments. The traditional investments are able to be bought, sold, traded by the financial services companies. they buy and sell traditional investments. They don't normally buy and sell alternative investments. Now, we do know that REITs, real estate investment trusts, they do have large REITs that are oversaw by the SEC, and those are traded. That's how real estate can become a traditional investment. And then on this other side, you have alternative investments that fall outside the purview of the SEC, and that is also what's called private equity, because you have this private money, not public money that's traded that you have visibility into, but you have this private money that's going and purchasing investments. So that is the broad delineation between traditional investments and alternative investments, and hence what private equity is.